Hi everyone, wonderful to be here. I'm Seema Khinda Johnson. I'm co-founder and COO of a business called Nuggets. Background, before I go into that, I'll give you a little bit about my background, I think. So, used to head up go-to-market globally for Skype and Microsoft, and essentially have been in the tech space for about 20 years before setting up Nuggets with my husband in late 2017. So, husband and wife team, happy to share the ups and downs of that, but it's actually been good. So yeah, Nuggets, we're essentially a decentralized identity and payment platform, and what we do is that we work with businesses, embed our technology within their financial applications to keep all user data private and safe. So when you log in, when you pay, when you verify your identity, essentially what we do is ensure that there's no tracking or you can't correlate that data. So in the age of data breaches, deep fakes and fraud and social engineering, it's a compelling value proposition. So happy to share more. We've now launched globally. I caught the tail end of that, but essentially it feels like you were talking about the US. So last year we launched in the US. So yeah, an incredibly exciting time. Happy to answer questions on life in startup land.
Yeah, and so I actually have two hats. I work in Fintech is my kind of passion project, and as you see when I'm sending out emails on Sunday night and first thing in the morning, I do it around my day job. So my day job is that I'm CEO of iPushPull. iPushPull is a capital markets fintech. We do a lot around data sharing and automation, and some of the things Martin was talking about. We work with Parameta and TPI Cap, who actually invested in our company, iPushPull, 2 years ago. So we're going to talk about startups and keep it pretty broad, because everyone's always interested in startups. When I graduated, everyone wanted to be a trader or a management consultant. Now everyone wants to be an entrepreneur. So let's start. I suppose, what is a startup? Because it's a broad umbrella term for a company that's a one-person company through to a few thousand people, right?
Yeah, absolutely. I mean, I don't know. I was thinking about this because I've never had to actually define what a startup is before. So I thought, what is it? And I was thinking about, when I think about Nuggets, I think about it's a collection of us. When we set up the business, I can give you that as an example. Essentially, there was two of us, husband and wife team. We were then building a team around this real purpose-driven mission that we had. So I would definitely say it's that it's a collection of people that are really driving to deliver some form of mission, have huge amounts of purpose, and because it's not easy. So you're trying to build something people want. I think Paul Graham said that, all of us should be striving to build products and services that someone actually wants to buy or, loves. And that's what we constantly are trying to strive for. So there's lots of things, that we'll probably talk about, like finding your product market fit till you get to that point. So yeah, I would say the most important part of a startup is it's a group of people that have a shared vision around delivering a shared mission. I don't know if you want to add to that.
Yeah, I get probably anything specifically is obviously you're out to solve a problem. Yeah, because a lot of people think, let's just start building something and see if people will come, and that doesn't work. You need to solve for a problem, and if you look at every single company that's ever been started, there's been a problem somewhere, and someone has gone out to solve it. And that's always quite an interesting thing about how do you actually get into working into startups. And if you've just been a university and want to go straight into a startup, you've not actually come across that many problems because you've never really worked in a company, been out there and seen all these things. So there's value as well to kind of working in big companies, so you can experience some of these things and some of these problems, and then actually you might see something that you think there's a gap there, and then you make the leap to go and do it. And actually on that point, I think we should talk about risk and reward as well, right? Because risk reward is like, we're older than probably a lot of students, right? And when you're a bit older and you've got kids and a house and all these things, your risk tolerance differs because you have a lot of outgoings and a lot of things you need to do. So one of the things about startups is it's risky going into a startup, but again, these different scales of startup. If you went to work with a 2-person startup, the risk is incredibly high of you not making it. It's very, 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 very high that you will fail. But then as you start going up to up and towards 10-person company, 20, 50, 100,000 people, they're still defined as startups, which we'll come on to later on about kind of investment and funding rounds and things like that. But that risk-reward piece, do you want to talk about that?
Yeah, absolutely. I mean, I can give you my example, I suppose. When we set up Nuggets, we had saved, we both worked for venture-backed startups in the past, and we really wanted to make sure that we had the time to really drive to deliver Nuggets, and because we were very early. So at that point we were bootstrapped. So for that meant putting all of our savings. We didn't pay ourselves for like 3 years. So I think that's another really big thing. You talked about it's become really fashionable now, but it's actually really hard. It looks all glamorous. Everyone thinks going to be in a WeWork. It's going to be really exciting.
Bring
bring the beers, bring the dog in. I've got a big German Shepherd, by the way. It's 50 kg. Should have brought him around. So I think you think it's going to look really glamorous, but it's really, it is hard, isn't it? So when we talk about risk and reward, and you talked about solving a real world problem, and I talked about purpose and mission, if you almost don't have those things to hold on to, it's really hard, because you have to convince people to work for you. You no longer have the big brand behind you. You have to actually convince people that working for your startup is a good thing. And I think you in our case, we were bootstrapped for like 3-4 years. So you essentially put everything on the line. And that also makes it really difficult to see the wood from the trees, because you put everything on the line. You're a bit like, is this still a good idea? Should we really be putting, I've got like no money left. Don't know how I'm going to pay the Sainsbury's shop. But for whatever reason, if you feel you've got that, you take on that risk. And I think that also comes with almost like an entrepreneurial mindset. If we talk about some of those differences that happen in corporate world or working for a large corporate, yes, you learn under someone else's salary, and it's really useful information, and it's great, you can grow and you can become senior and all of those sorts of things. And that probably doesn't have that risk, but it also doesn't have the reward. And I think on the startup side it's all on you and your team to, I suppose, take that risk and then hope that there's going to be a reward at the end of it.
Yeah, I totally agree. Like, don't sugarcoat working in a startup. It's really, really hard work, very long hours. You're working every single day. But what Martin was talking about earlier about finding something you're passionate about, then if you love what you're doing, then it doesn't really matter, because it doesn't feel like work. And I think that's the thing when you're running your own startup. It doesn't feel like work because you just love doing what you do. And then you find this, a really nice overlap between these different. If you can find, I think it's that Japanese, kiyagi? I forget the word now. There's a Japanese word for that, isn't there? Where it overlaps, what you're good at, what you're passionate about, and then solving problems as well. I suppose the other thing as well, on the flip side though, it can be very lucrative. You obviously only hear all the big success stories, but if things go well, they can go really well. If you look at Revolut's the poster child for fintech globally, not just even in the UK. And they just did their round, was it 45 billion, I think? And I know quite a few people that invested at the seed round. And we had, in the last conference, if you remember Lewis, he was like the first employee in Revolut. And I've always quizzed him about how much, what his options were. And he's never given me an answer, but I've kind of worked it out. So
I'll give him a call.
Yeah. The next kind of topic is kind of key challenges and opportunities. But I think we've probably covered some of that. But why don't we talk about what type of team you need to hire, because the hackathon later on is about building this finance app, which has made everyone work as a team to think about that. But if you're starting a company, for me, there's kind of some core people you need in a team to get started and a core skill set.
Yeah.
Do you want to talk about that?
Yeah, absolutely. So I think, just be careful. I think when you look at startups, you see loads of C-suites. So you see a CEO, you'll see a CTO, you'll see a COO, CMO. And I think those roles, or if they're the founders or the co-founders, just really thinking about how hands-on those individuals are. I mean, you're talking about a hackathon today, so there needs to be a hands-on developer on the team. There needs to be someone that not just thinks about the development of the product, but also thinks about the UI, UX, so the customer experience, whether it is a B2C product, which is direct to consumer, or if it's an enterprise type product. You need someone on the team that can really think through what that user experience is as well. So I think those two are definitely key roles within the team, but you need to be able to as well, when we talk about process within a startup, teams that are able to really iterate and deliver in short sprints, because obviously one of the great things about being a startup is you don't necessarily have all of those crazy processes, like a waterfall type process, which is like, let's do loads of discovery, now let's do functional requirements. It's more iterative, so you're delivering in almost, in our case, 2-week sprints. So you constantly want a team that is able to do hands-on delivery and be less fixated on titles, but rather the roles that need to be delivered. So definitely some form of lead developer, definitely someone on the user experience UI side. You need someone that can fundraise and have the strategy, and I would say that's a CEO, founder. And you need someone as well to have a look at your financials. So you might not need to have a CFO, but you definitely need to have someone that is able to work with you on things like, how you monetize your product, how do you take it to market, what is the cash flow, what is the forecast, because these are all the sorts of things that you need to have in place if you even want to get investment from an angel or a high net worth. So just really small, nimble teams, I would say, and I've made some mistakes there before in Nuggets, where I really was hiring people for working with them at Microsoft and Skype, and you realise as well, if you're great in those sort of more corporate environments, it doesn't necessarily translate to being brilliant within a startup where it's all on you to not only come up with the product, but also, iterate and get something out to market. I don't know if that helps.
Yeah, no, definitely. I think there's extreme ownership for everything that you're doing in a startup. In a big company, you can kind of get away with it because there's other people to lean on. And there's also other people on the flip side. In a big company, there's other people to ask a question to. Whereas when you're in a startup, you're on your own. You've got no one. So when people are investing in startups, people often get more investment if there's more than one founder. You've got a co-founding group. Because otherwise you've just got one person leading everything. You hear of all these, people that, like Travis at Uber and like Elon with Tesla. Elon didn't even set up Tesla. He's not the founder of Tesla. He bought it off someone else because he was a small investor and took it on himself. But these kind of one-man people, like Zuckerberg and so on, that's kind of what's happened going forward. It's hard, but then you've got AI tools, and you've got a lot of people talking about, the world's first solo founder who's worth $1 billion. Yeah. That will happen without a doubt because of the tools that are there. But going back to kind of reality is that you need a really core founding team, and what works as well, because I've been in my first company there was 2 of us as founders, and the second company there's been 3 of us as founders. I've found that having 3, the husband and wife thing I'd be interested to hear about, but having 3 people as founders I've found has been really, really useful, because then we've actually never had an argument at all in like 9-10 years, but I think because we've got similar kind of similar in lots of ways and not similar in others, so we've always got useful overlaps of knowledge and experience and insight and how we look at stuff. But I found that's worked really well. But going back to your answer, you need someone who's the visionary, who's out there, and that person is going to be the person who's selling the dream to your customers and selling the dream to your investors. And sales, everyone needs to do sales. Doesn't matter if you're doing coding or if you're doing data or you're doing data security, everyone needs to know how to sell. That's the most important tool that you can have. And that's probably even more important than networking, because if you're going to be networking, you're selling yourself. So everything you do in life goes back to sales. So that's super important. You need that person who's kind of outward facing, doing the sales piece, selling you and the team, selling the company, selling the idea, selling the product. You need someone to build the product, so you need someone who's got some technical skill. And then you need someone internally who can think about the product and strategy side of it. But that's probably going to be a combination of the first 2. But you need someone who can kind of the operational piece as well, because you still need to find an office and pay bills and hire people and do all these other things as well. That takes up a lot of time. So you need this kind of core group of people, like 3 or 4 people, I think, really to get started properly. And you don't need to do it on day one. Day one, it's always just going to be you, and then you need to go and seek out those other people. You need to find out what's the gaps in your knowledge and experience and how other people can fill it. So let's move on to the next question about do you need investment to build a startup? So it sounds like you did it with your own money to start.
We did. I don't know if that was the best use of that money, to be honest. But it was good because it showed to our investors. We started, I think it was quite unique to us because we started in blockchain in 2016 when no one was touching it. So it was like a really, especially in the UK, it wasn't seen as a, UK is just very risk averse. You know, imagine selling some sort of like decentralized solution to a bank, you know, maybe you'll stay within the innovation team doing that. So we had to put our own money into it because it was really tough to get VC funding at that stage. But over the years, we've then had investment, and off the back of that investment, you know, you've shown that you've hit certain milestones to be able to unlock different valuation, then you can attract other investors, and then as you hit those milestones, and then you might do another raise and everything else, but it needs to be tied to KPIs that you need to hit to be able to get that investment, and then just ensure that you're answerable to your investors. So happy to share more on that journey for us as Nuggets, but I don't think necessarily you do need to have lots of investment. Actually, it's been a really good thing for us because it kept us, even today we spend every penny like it's our last. And when we set up our business in, you know, actually operationalised it probably late 2017, there were startups that were setting up around us, and they've already, you know, they've closed down, had another startup, was VC backed, started. I've got colleagues you probably have as well that have had 2 or 3 startups in the time that I've had Nuggets over 7 years. So I think there's something really amazing about spending the smallest amount of money you can to get to product market fit. And I think sometimes when you do get big VC money, you sort of lose it and think, oh, well, I want to, you know, do some sort of rapid growth before you maybe have hit those milestones.
Yeah, and also the temperature of the environment has completely changed now than it was, you know, 10 years ago.
Yeah, of course.
You had 0 interest rates, you know, thereabouts. So money was effectively free. So VCs were, and the reason why there was so much investment going into startups, because if I'm one of John Shepherd's clients, like high net worth private client, and I've got, you know, 20 million quid in my bank account, I'm not going to leave it in my bank account. I'm getting 0 interest. So where can I put it? So I put it in a diverse portfolio of stocks and bonds and all these different things, and I'll put like maybe 5 or 10% of it in venture capital, where they invest in firms like when we're starting, right? And they do that for a higher rate of return. Interest rates are like 5% now though. So it's like, okay, well I put less than, you know, I'm not going to put 10% of my portfolio, I might put like 7.5% because I'm getting 5% on interest in my bank account, taking 0 risk. So again, that risk reward piece, that drives everything, you know, every decision. It just, in terms of investment as well, I suppose, to demystify very, very quickly all the kind of things that you hear. So the different kind of funding rounds that you have. So when you start off, ideally you'd never want to raise money at all. You would just grow a company organically through doing loads and loads of sales. But the reason why people go and try and raise money is so they can build a company and kind of move quicker. And you might have so much demand for your products that you can't move quick enough because you know you need to hire more people. And that's kind of a good time, you know, to be hiring, getting investment. So the different stages of it, you have what's called like friends and family, which literally is, you know, getting money out of your own pocket and from your parents and from your Uncle Bob or whoever else. And then you kind of go through angels, and there'll be angel investors who might be people who were entrepreneurs and they've sold their company, and they're just putting 25 grand, 50 grand a pop into lots of different companies because they want to support the ecosystem and also can give back. They might be able to help, you know, those entrepreneurs coming through. And then at that point, that's when you're still early stage. You know, at the beginning, I think Jinesh was saying he raised money just for the pitch deck. That's that friends and family and angels, that's pitch deck kind of level. And then when you get beyond that, you need to have a product, and you need to have some customers. And then when you start to get some product market fit is when you get to this Series A. Series A basically means your first institutional funding round. So that could be anything from £1 million to 10, 15, 20 million pounds, depending on what your background is, what your product is, what area you're in, you know, what the trends are that's going on at the moment. So, you know, if I worked at OpenAI as a developer, and prior to that I worked at Microsoft, if I went out then to try and raise a startup doing AI agents, I could go and raise probably 5-10 million quid at essentially the seed round, the friends and family round, very easily, because I've de-risked as an investor. I would have de-risked my investment into you because I was like, okay, well look at your track record, and the chances of you getting it wrong is lower than giving it to someone who just has no experience whatsoever. And then you have these rounds going through Series B and C and D, it goes all the way up the letters of the alphabet. But the kind of the end goal for not all companies, but most companies, is having like an IPO. So it's always about having some sort of liquidity event, so that if I've set up a company, I want to be able to, kind of go and sit on the beach one day. But I think most people who are entrepreneurs, you'll never sit on the beach because you really love working, right?
Yeah.
Like I love what I do, and I spend all hours in the day doing it, and it excites me, and I really enjoy doing it. And I suppose on that as well, that kind of enjoyment piece. Let's get to the next question about building a strong company culture and why is it important?
Oh, it's crucial, because I don't know if any of you have had any work experience before, but when you're somewhere where the vibe's not great, you don't want to really give it your all. And I think it's just really crucial when you're, when we talked about that small collection of people, or there's a few of you with a shared vision, it's really hard if you don't have a collaborative, open culture where you can talk about your differences without getting angry with each other, or you're able to voice, whether it's a different opinion or a different idea without doing that. And I think you've almost got to safeguard it with everything, because it can be the difference between, what do they say about startups? You don't actually, the biggest reason a startup fails is suicide versus running out of money. And I think a big suicide really is that either you don't get on with your co-founders, and it was amazing that you've got 3 and you all are collaborative and you get on. I mean, I've heard horror stories about 3 because the decision making split, or 2 people side or whatever. But I think, you've just got to ensure that there's no politics. You've got to ensure that there is a shared vision. And at the moment you feel something's going wrong with the culture, you have to almost, at that stage, I know it's happened with us before, in the early days, we've just let things go, and actually you need to stop it right then, because it just takes one person, and it can really destroy the culture. So incredibly fragile, but it's so imperative if you want to survive the journey when we talk about things being tough. Yeah.
I think we could keep talking for a while, but we're actually coming to the end of this slot. But we've got time for one question. Oh. Who's not had a question? You.
Okay, so for both of you, you must have experienced hurdles or sticking points during your startup. What would you say is the biggest one, and how did you stay motivated?
I think going back to that piece about choosing your founders wisely, when you're starting up a company, it's like being in a marriage. I mean, it's like with you, but it's like starting a company is starting a marriage. It's for the long term. You're going to be with that person for. If it doesn't work out, you find out quickly, and then you get that suicide option. Then after a year or 2, it just goes completely. You'll go separate ways. Most likely, any company is going to be running for at least 10 years until it starts to get interesting, because it takes that long really to build things up. So 10 years, is a very long period of time, and it might be 15 or 20. So a lot of companies, that you hear that are successful. You even look, Facebook and all these companies are like 20, 25 years old, right? So they're not. You kind of think of them as cool startups. They've been around for ages, and they've got hundreds of thousands of people that work for them. But you need to have, you need to really kind of pick your founders and pick your core team wisely. Because otherwise, if you don't, you can get sticky. And I think, like you said, if something's not right or someone's being toxic, you need to stamp it out immediately, or figure out some way to manage it. Because otherwise, that's going to be like a cancer, and it's just going to grow and grow over time.
Yeah, I think for me, like a real world, but in my case, has been nearly running out of money and not being able to pay salaries. Have always paid them, not paid ourselves, but that probably has been, in the early days, one of the hardest things. And actually, even as I talk about it now, reliving that feeling of going, oh my God. And you can't just, because your salaries at that point might be, for us at that point was our payroll at that point was about 120k a month. There's no one you can phone for that money. Like, I can't phone my mum and dad and go, Mum, Dad, can you transfer 120k? I'll give it back to you. I don't know when we're going to close that investment round. You know, it's not like 5, 10k. And I think that where you've got employees relying on paying their mortgages, paying their kids' school fees, paying their bills, it's like you've got to pay the salaries. And I have to say, God, thank whatever it is, whether it is, you know, an amazing, divining thing, but each time when that happened to us in 2018, for some reason, we just got saved. Like, the money came in on the Sunday, we were able to pay. Oh, but it was horrible. And I spend now every waking moment trying to sell nuggets because I never ever want to feel like that ever again. So I would say, yeah, it's real.
Seema, thank you very much.
Pleasure.